Ever found yourself overwhelmed by the volatile nature of index trading? Unsure of the right strategy to adopt? The world of trading can be a daunting place, filled with unpredictable market trends and the constant challenge of identifying profitable trades. It's a world where fortunes can be made or lost in the blink of an eye, and where the stress of constant market monitoring can often feel overwhelming. Many traders, both new and seasoned, often find themselves grappling with the erratic nature of the markets. The unpredictability of economic events, coupled with the complexity of global market trends, can create a trading environment that's as volatile as it is unpredictable. It's like trying to navigate through a storm without a compass. You're never quite sure of the direction you should take. Then there's the challenge of identifying profitable trades. This is no easy feat, especially in the fast-paced world of index trading. It's akin to searching for a needle in a haystack. You're constantly sifting through heaps of data, looking for that one opportunity that could yield significant returns. And let's not forget about the stress of constant monitoring. In the world of index trading, the markets never sleep. Prices fluctuate throughout the day, and a trade that seems profitable one moment can quickly turn into a loss the next. It's a game of constant vigilance, where even the slightest lapse in attention can lead to missed opportunities, or worse, financial losses. But what if there was a way to navigate these challenges with greater ease and precision? A tool that could provide a clear path through the volatility, help identify profitable trades, and reduce the stress of constant monitoring? A beacon of light in the stormy seas of index trading? Enter the Channel Commodity Index. This powerful trading tool could be the solution you've been seeking, offering a way to tackle the struggles of index trading head-on. But how does it work, and how accurate is it? Let's delve deeper in the next scene. The Channel Commodity Index, unlike traditional trading methods, offers a unique approach to index trading. Now, if you're wondering what the Channel Commodity Index, or CCI, is, let's break it down. In essence, the CCI is a technical tool that traders use to identify potential market trends and make predictions about future movements. The CCI was developed by Donald Lambert and introduced in the early 1980s. It's designed to detect beginnings and endings of market trends by measuring the current price level relative to an average price level over a given period of time. The concept is to buy when the CCI moves above a certain positive threshold, indicating an overbought market, and sell when it falls below a certain negative threshold, indicating an oversold market. Now here's where it gets interesting. The CCI is not just a simple moving average. It uses a complex mathematical formula that includes the mean price, the high and low, and even the closing prices. This gives it a broad perspective, allowing it to capture the nuances of the market that other indicators might miss. But the real beauty of the CCI is how it brings all these elements together. By considering numerous factors, it provides a comprehensive view of the market, helping traders to make informed decisions. It's like having a crystal ball that can see into the future of the market. Well, not exactly, but you get the idea. The Channel Commodity Index can be a powerful tool for traders, especially when used in conjunction with other technical analysis tools. It's not a foolproof method, as there's no such thing in trading. However, when used correctly, it can help traders identify potential trading opportunities and make more profitable trades. By understanding and utilizing the Channel Commodity Index, traders can make informed decisions and potentially increase their profitability. Remember, the key to successful trading is not just about following trends, but also about understanding the tools at your disposal and using them wisely. So, how exactly does one use the Channel Commodity Index to their advantage? Well, let's delve into the step-by-step process of using this powerful trading tool. First, we need to set it up on our trading platform. Most trading platforms have the Channel Commodity Index, or CCI for short, as a standard feature. To activate it, you simply navigate to the Indicators section, search for Channel Commodity Index, and click to add it to your chart. Once you have the CCI running on your chart, you'll see a new line oscillating around a zero line. This is the CCI line, and it's your compass in the world of index trading. Now let's talk about how to interpret the data the CCI provides. The CCI measures the current price level relative to an average price level over a given period of time. It's all about understanding the position of the CCI line in relation to the zero line and the traditional threshold levels of positive and negative 100. When the CCI line moves above positive 100, it means the price is above its average price, indicating a strong upward trend. This is usually considered a signal to buy. On the other hand, when the CCI line drops below negative 100, it means the price is below its average price, indicating a strong downward trend. This is generally a sign to sell. But remember, the CCI is not a standalone indicator. It should be used in conjunction with other indicators and market analysis to confirm signals and avoid false alarms. Now let's talk about how to make trades based on the CCI's predictions. When the CCI line crosses above the positive 100 level and then starts to decline, it's a good time to consider selling. Conversely, when the CCI line crosses below the negative 100 level and then begins to rise, it's a good time to consider buying. However, always keep in mind that the CCI, like any other trading tool, is not foolproof. It's crucial to manage your risk effectively and not to rely solely on one indicator. A good practice is to set a stop-loss order to limit potential losses if the market moves against your prediction. Finally, let's discuss the best setting and time frame for applying the CCI on your chart. The default setting for the CCI is a 14-day period, which works well for most traders. However, you can adjust this setting based on your trading style. Short-term traders might prefer a shorter period, while long-term traders might prefer a longer one. As for the time frame, the CCI can be applied to any, from 1-minute charts to monthly charts. Again, this depends on your trading style and the kind of trades you're looking to make. With practice and patience, the Channel Commodity Index can become an invaluable tool in your trading toolbox. Now that we understand how to use the Channel Commodity Index, let's unpack its key features and benefits. One of the most salient aspects of the Channel Commodity Index is its predictive capabilities. This tool is not just a mirror reflecting past market activity, it's a crystal ball. It uses historical data to forecast future price trends. And as any seasoned trader knows, anticipating market movements is half the battle won. The Channel Commodity Index is also a reliable scout, tirelessly scanning the market terrain for profitable trades. It looks at the relationship between commodities and their moving averages, identifying potential trade opportunities where others might simply see chaos. That's like having an extra set of eyes, always on the lookout for the next big opportunity. What's more, the Channel Commodity Index is a great democratizer. You don't need to have a degree in finance or years of trading experience to use it effectively. Its user-friendly interface is designed to be intuitive and accessible, even for beginners. It breaks down complex data into understandable metrics, putting powerful insights at your fingertips. Let's not forget about versatility. The Channel Commodity Index is not a one-trick pony. It can be used in any market and in any time frame. Whether you're a day trader, swing trader, or a long-term investor, this tool can be customized to suit your trading style and goals. Finally, the Channel Commodity Index is built for accuracy. It doesn't promise a 100% win rate. No tool can. However, when used correctly and in conjunction with other indicators, it can significantly increase your chances of making profitable trades. It's like having a trusted advisor by your side, guiding you through the twists and turns of the market. In conclusion, the Channel Commodity Index is more than just another trading tool. It's a predictive powerhouse, a vigilant scout, a user-friendly guide, a versatile companion, and a reliable advisor. The Channel Commodity Index, when used correctly, can provide traders with an edge in the volatile world of index trading. In a world where index trading can seem like a gamble, the Channel Commodity Index provides a beacon of clarity. It's been a fascinating journey, hasn't it? Together, we've uncovered the struggles of index trading, delved into the mechanics of the Channel Commodity Index, and walked through a step-by-step guide on how to use it. This powerful tool, when used with the optimal settings and timeframes we've discussed, can help you achieve a win rate that's close to perfect. It's not magic, it's not luck. It's a method rooted in data, analysis, and a keen understanding of market trends. Remember, the Channel Commodity Index is not just a tool, but a guide. It's a way to bring order to the chaos, to find patterns in the seemingly random, and to navigate the unpredictable world of index trading with a steady hand and a clear mind. With the Channel Commodity Index, you can navigate the choppy waters of index trading with confidence and precision. Happy trading!